Hello everyone, I hope you can hear me. Welcome to the webinar. It's great that so many of you showed up today. So today's topic is going to be price action trading. I'm going to show you a couple of my setups and price action tips. This is, I think, my 6th time I did a webinar with NinjaTrader, so I'll just go over the introduction real quick, just cover the most interesting stuff. So I've been actively trading since 2008, and a couple of years back I started a website, trader-dale.com, and that's a website where I teach people how to trade using price action, volume, and order flow. And I also developed a couple of indicators. That's volume profile indicator, VWAP indicator, and order flow indicators for NinjaTrader 8 platform. I also wrote 2 books. It's a volume profile book, and I'm going to give you this book at the end of the webinar as a special thanks for coming here today. And also the second book, that was the order flow book. So let's now talk about price action. Now, when I started to trade all those years ago, I was using so many indicators, as probably all of you did. I had all those indicators on my chart, and I was looking for a holy grail, which obviously I wasn't able to find, and there's no such a thing as a holy grail among indicators. And actually the first major breaking point in my trading career where I actually started to make money trading was when I deleted all those indicators and I started to trade using a simple price action. And that was the first breaking point in my career. So if you guys still are searching for that holy grail, and if you still have that ton of indicators on your charts, then my first advice today would be just get rid of all those indicators and start using simple price action chart. And I think that pretty soon you will see that you will improve quite a lot. So the reason why I like price action is that price action is universal. You can use it all across the markets. You can use it for trading currencies or futures or cryptos. It doesn't really matter what you trade. Price action is universal, and the setups and the tips which I'm going to show you, they are universal, so you can apply it on any trading instrument. Now, what I also like about price action is that you can apply it to all time frames. At least the setups and what I'm going to talk about today, you can apply that to all time frames. So no matter if you guys are scalpers using 5-minute time frames, or if you are long-term investors using, let's say, daily time frames or weekly time frames, it doesn't really matter. What I'm going to show you is universal, and I can generally say that about the whole price action concept, and that's what I like about it. So probably the most important thing about trading price action and about reading clean charts is to be able to distinguish a rotation and a trend. The reason for that is that if you look at any chart, it basically consists of either rotation or a trend. Usually there's not really anything else. All charts you look at are basically combinations of rotations and trends. Now, why I'm talking about this? Rotation zones are super important because rotation zones are liquidity zones. For example, rotation like here in this picture, right? This rotation. So a place where the price is rotating is a significant liquidity zone, and heavy volumes are accumulated in such a zone. And the reason for that is that big trading institutions who move and manipulate prices, they have insane amounts of money they trade, and they need to allocate that money into markets, right? And they need to do it slowly, unnoticed, so they don't move the market too soon. So the rotation is a place where those big guys, those big trading institutions, are accumulating their trading positions, right? Big guys are getting ready for a trend. And that's why rotation is super important. And rotation is quite common. If you look at charts, I would say very roughly, I would say that it's like 70% of all time markets are in a rotation, roughly 70% of the time. Depends on the market, but generally speaking, 70%. Now, after those huge trading institutions accumulate their trading positions in a rotation, what happens next is that those guys need to start a trend to make those huge positions profitable, right? So after a rotation, there's always a trend, like here. And in the trend, the strong institutional buyers from this place, from this rotation, are making money on the long positions which they placed in here in that rotation. That's what happens with rotations and trends. And trends occur only around 20 or 30% of the time. As I was saying, the rest, it's just a rotation. All right, so trend, big guys are making money, and in the trend, price gets manipulated. Now, why I'm talking about this is that rotation zones act as strong support and resistances because heavy volumes were traded in those rotations. So if you look at this picture, then there is a rotation right there. And what I did is that I printed volume profile here. Volume profile is a tool that shows volumes at a time. All right, so the wider the volume profile is, like for example in here, the heavier volumes were traded at this place. So as you can see, the volume profile shows that in that rotation, heavy volumes were accumulated. The volume profile I'm showing you here, is there just, to prove that in a rotation, heavy volumes are accumulated. If you compare it, for example, with this area, then the volumes in here are way heavier, right? So anyways, rotation areas with heavy volumes act as a strong support and resistance zones because heavy volumes were traded there. And heavy volumes, that means big trading institutions, right? So remember that. We'll talk about this several times during the presentation. Heavy volume areas or rotation areas work as a strong support and resistance zones because heavy volumes are traded there. All right, so that brings me to the first setup that I'm going to talk about. And here are the steps to trade this setup. So first thing you do is you identify a rotation from which a strong trend starts. Like on that picture, right? So there's a rotation, price is going sideways, and from there, there's a strong trend. That's the first step. You need to find something like this on your chart. Then the next step is you wait for a pullback, and you wait for the pullback to the border of the rotation. So in here, the border of the rotation is right there. And you wait for the price to make it back to this place, to the border of the rotation. And from there, in this picture, you would go long, right? And you would go long here because there was this strong buying activity commencing from that rotation. The logic behind this is that strong buyers were building up the long positions in here. And by the time there was the rotation, we weren't really able to tell that those were strong institutional buyers. There's not really a way how we can tell this. But after the trend, I mean after the rotation, there's that trend, strong uptrend. And the uptrend is telling us that strong buyers were here, right? And those buyers are likely to become active again when the price reaches the beginning of that significant zone, right? So when the price reaches that beginning of that zone again in here, then the buyers from here are likely to defend this place and try and manipulate the price upwards from there again. This is an important zone for them. Now, this is a long trade scenario. Let me show you what the short trade scenario would be. Short trade scenario would be if there was a rotation like this, but from that rotation, there would be a downtrend. If there was a downtrend, that would tell us that strong sellers were accumulating shorts in here. right? So what you would do is you would print a line here, or just set a limit order here and wait for a pullback and go short from here, from the lower border of that rotation, right? From here. So that would be the short trade scenario of this, right? Now, here is an example of this. It is an example of a short trade. By the way, this chart, that's euro dollar, it's a daily chart. And here is a rotation. Price was going sideways, and from that rotation, very strong trend started, right? You see that aggressivity of sellers pushing the price downwards. This is a clear sign of aggressive institutional sellers pushing the price downwards from this area, from this rotation area. Remember, I was telling you that there's always a rotation and then there's a trend. So in this rotation, strong institutional sellers were building up their shorts, and when they were done, they pushed the price aggressively downwards. So what you do is you draw the line from here like this, and that will be the resistance to trade from. What you do next is you wait for the pullback, and it doesn't really matter how long you need to wait, because markets have great memory. So you just wait for the pullback, and when the price finally reaches that place, then you go short from there, right? Now, here are 2 tips regarding trading the rotation and a trend. The longer the rotation, the stronger the trend. So if you look at here, this is US dollar Japanese yen chart. It is a daily time frame, and there was a very, very long rotation starting from June up until October. So very long rotation, and look what happened afterwards. Boom, a huge and strong uptrend, right? So the longer the rotation, the stronger trend you can expect. Now, another thing, in my experience, the longer the rotation, the higher the chance of a trend starting. This is what it means. Price rotates, right? And the longer the rotation is taking place, the bigger the chance of this happening, right? Of a strong uptrend starting. Now, why I'm telling you this is that what a lot of people do is when they see such a price channel, they trade shorts from this area, right, towards the center of the rotation, and longs from the bottom of the rotation. They trade like this. And I do it as well. I have a volume profile setup which trades this. I have a VWAP trading setup that trades when there's a rotation like this. But the longer the rotation is taking place, the bigger risk that the price will start trending. So I take a couple of these trades, and then when the risk of a new trend is higher and higher, I just stop doing this, and I'm getting ready for trading in a trend. And obviously trading in a trend is, different than trading in a rotation. So that's why I'm telling you this. All right, now a lot of people ask me this, so I'm going to talk about it a bit. This is a picture which you already saw. That's the euro dollar daily chart. And what people ask me very often is, why don't we trade breakouts? Like, there is that rotation, right? And the price shoots out of that rotation. So clearly there were institutional sellers in here in this rotation, and then the strong trend starts. So why don't we trade breakouts from there? Why don't we go short from here or from here when the price breaks out of that rotation? Well, I got that idea as well, so I was testing it, and it wasn't very successful. The reason is that there were too many false breakouts. check this out. There's this rotation, right? If you are trading this breakout strategy, then what would happen is that you would go long from here, right? As soon as the price broke out of this sideways price channel. So you would go long, but then, tough luck, price reverses. So that would be a losing trade. Again, short from here, but what happens next? Price turns, so again, tough luck. Price goes back towards the center of the rotation, so 2 false breakouts. And now another one, false breakout. The price breaks out of that rotation, but then turns and goes the other way. See? That's why this strategy simply isn't working. There are so many situations like these to make this strategy profitable. At least I wasn't able to find an edge in trading this. I was trying pretty hard, but just wasn't working, so maybe I just saved you some time, guys. Anyways, let's go to the second setup which I want to talk about, and this one is called the open drive. The open drive is a place where the price leaves a rotation area and starts to move aggressively into a trend. So there's a rotation, right? And from there, boom, a huge candle, a new trend starts. And this place, the open of that huge candle that starts from that rotation, that's the open drive. And the open drive works as a strong support or resistance zone. In this case, because there was a strong buying activity starting from that open drive, this would work as a strong support in the future. So if the price went back, then it's long from there. Now, why this works as a strong support? The reason being is that open of this huge aggressive buying candle, that's the place where strong buyers started the initiative, right? They started aggressive buying, and this is the place where they started it. So this is an important place for them, and that's why the price tends to react to the open drive. Now, the open drive is even better if it begins with a big candle. That means if there's a rotation and then boom, huge candle, and it doesn't really matter if it's a candle caused by macro news, it doesn't matter. If it's a strong candle like this, then it has a strong open drive and there's a strong support, right? Because big candle shows determination and strength. In this case, it would be determination and strength of buyers. It could look, for example, like this. There is a rotation, and from this rotation, boom, crazy strong sell-off, and this is the open drive. This is where it all started. So this is the resistance. When the price makes it back to that resistance again at some point in the future, it doesn't need to be soon, but as soon as the price makes the pullback there, then it's short from there, right? Now, long trade scenario. There's a rotation, and from that rotation, boom, a huge green candle with an open drive right there. This is the beginning of that candle. So you wait for a pullback and go long from there. Now, if you remember the first setup which I showed you, based on the first setup, what you would do, you would identify a rotation and a trend starting from the rotation, and then you would take pullback to the border of the rotation. So in this case, this is the border of the rotation. So this would be the support. But if we talk about open drive, the support is in here. So what do we do? In most of the cases, those two supports are close. They're close, and I consider this whole area one strong support, right? And for example, in this picture, I consider like both those strategies confirm each other, right? We have that first setup, and it is confirmed by a strong open drive, which is a bit lower than this trade entry from this blue line, but still it is close, so it confirms this area, this general area where the price should react. Now what you could do is you could just mark this support, this whole area in your chart, and if you have order flow, then you can wait for a confirmation on order flow, confirmation of big trading institutions jumping in and starting to go long from there. But if you don't have the order flow, then what you simply could do is just, oh, I need to draw it again. When there's a pullback to the border of that rotation, go long from there, right? That's the first support, and this is the open drive support. And your stop loss needs to be behind this, let's say, double support area. So there needs to be enough room for the price to shoot through the, let's say, first support, hit the second one, hit the open drive, and then turn, right? So you need to let the trade breathe. But I definitely recommend entering your trade from this place and not waiting for the price to reach the lower support. This way you would miss a lot of potentially good trades. All right. Supports are, well, there are usually zones. It's not like one level is a support, like one thin price level. It's usually a zone, right? At least in my experience. All right, next example of the open drive. So there is a rotation, and from that rotation, we have strong sell-off. This is the open drive, right? The beginning of that huge red candle, starting the trend. So this is the resistance. You wait for a pullback and go short from there. And that's about it. That's the open drive. Nice combo with the first setup I showed you. Now, another setup is called broken high or low, and it works with the fact that high or low, I mean significant high or low, works as a strong support or resistance in the past. Let me do a little drawing here. Imagine there's a little rotation like this, and then boom and boom, and rotation again. This point, this is where the price turned aggressively. This is a swing point. This is a significant high. So when you look at the chart and see this, you can tell that this was a strong resistance, right? This place. Because the price bounced off that area very strongly, so it clearly was a strong resistance. Now, how to trade this? Broken support becomes a resistance, and vice versa, which means broken resistance becomes a support. So in this case, we have a resistance, right? There was a resistance. Now imagine the price goes like this and breaks through that resistance. It is resistance no more, and it just became a support, right? Because broken resistance becomes a support. So when this happens, you have a new support here, and that support hasn't been tested yet. It's for you to take. So wait for a pullback, and when the price hits this support, you go long. That's how to trade it. Now, if this isn't that clear, don't worry, I'll show you a couple of examples. So if you look at this picture, this chart, then you know what? Let me just sort of hide the right side of the picture like this, so you don't look at it. Okay, so this is what you should look for. In here, the price reacted very strongly to a level, then again to that same level. If you look at the chart and see this, then clearly this was a strong support in the past, right? It was a strong support. So what you want to see is the price to go past that support and start to move below that support. What happens with that support when it fails and the price starts to move below it is that the support turns into a newly formed resistance. And that's the resistance which you want to trade. So you wait for a pullback. And when the price reaches this newly formed resistance, you go short from there. Now, for this setup, it suffices that there's only one strong rejection like this. If there's two pointing you to the same support, then it's way stronger than one, obviously. And if there's even more than two, then that's just great. But for me, it's okay to have just one. If we have more, even better. So let me now delete all that drawing so you can see how it actually played out. Here is the reaction, right? So yeah, that's about this scenario. Let's now check a long trade scenario. In this case, the price was bouncing in here, was bouncing on an area 4 times. So when you see this, you can assume that this was a resistance. Right? Resistance. What happened next was the price went past that resistance. So that resistance turned into a newly formed support. So what you do? Wait for a pullback and take it from there. Trade that support. Alright, now this is my favorite combo. It's a combo of this price action setup which I just showed you and a volume profile setup. Let me show you real quick. This is an example of a trade, prediction of a trade that I published on my website. It was a trade on the euro dollar. So what you're looking at is the euro dollar chart, and this is a monthly chart. So it was a long-term investment trade. And here is the reasoning behind it. What I saw on the monthly chart, I saw that the price was strongly bouncing of this general zone. As you can see, the price wasn't bouncing off just one concrete specific level, but it was just an, area, general area. But that was enough for me because those reactions were really strong. Now, what happened next was that the price went past this support, turning the support into a new resistance. And the thing to point out here is when the price was going through that support, pushing through that support in here, look at volume profile, what volume profile showed here. It showed massive volumes. Do you see how wide the volume profile is here? This is the place where sellers were fighting with buyers. It was a huge fight because this was a strong support. So a huge fight. We see huge volumes here confirming that there was a huge battle, and sellers in the end were stronger. They pushed through. But this was a very strong resistance. Not only that there were those 3 rejections which turned into a support, but also we have that significant volume area here, right? Remember when I told you that heavy volume areas work as a strong support and resistance zones? Well, this is it. So this is the level to trade from. This is the resistance, all right? So the idea behind this trade was to go short from there, right? So I went short from there based on those 2 setups basically, and it turned out to be a very nice trade. I made 1600 pips on that. It was a long-term investment. I held it over a year. So yeah, that's my favorite combo of using this price action setup and combining that setup with a volume profile setup, right? You want those 2 setups to point you to the same level, or roughly the same resistance zone. So that's about that, but you don't need to use volume profile for this, right? If you want to stick just to price action, that's fine. But if you add volume profile and do combos like this, it will be even better. That's what I prefer in my trading, do combos like this, right? Setups confirming each other. And it's even better if those setups are completely independent, like price action and volume profile. Now, another setup, and this one is a bit crazy. It is not my setup, but when I heard about it, I thought that this was just a crazy setup, which couldn't work. So what I did was I did a huge backtest on it, and I went over thousands and thousands of trades, guys. And what I found out that this was actually working. And let me show you. This setup is called ABCD. AB equals CD. And it is based on the fact that markets move in a sort of, even when they are trending, they move in a sort of wave-like manner. There's not often a trend that would be like this, like a straight line, right? When there's a trend, even if it's an aggressive trend, then there are always those pullbacks, right? Those little waves. And this works with that. So you are trying to catch those waves and trade based on that. So first, let me talk about this picture. This is a long trade scenario. And first thing which you want to see here is price making a swing point like this, swing point A. Then the price goes downwards and makes a swing point B, and then you want to see a pullback to swing point C, and then you need to start to see the price to go downwards. What you need to find is this place. By this time you don't know where it is, but you want to find the D place and go long from there. And the way to find it is this. You measure the distance from A to B, right? Distance, pip distance between those 2 points. So let's say that in this case, we measured it and it was 50 pips. By the way, I'm using Fibo tool for that, so it's pretty quick. So you measure this distance, and what you discover is that from A to B, it's 50 pips. So what you do next is you want to take the swing point C and measure also 50 pips from the point C. So you measure 50 pips from the point C and 50 pips below C. There's your level D. So you identify the level D, and from there you enter your trade. You go long from there. That's about it, right? I know it's funny, but you guys go over charts, see how it works, you will see that this really does work. Now, the bearish scenario, the short trade scenario, is the same, only reverse as the bullish scenario, but I'm going to go over it again so it's clear enough. So again, what you want to see is a swing point A, and then you want to see the price to rise to a swing point B, then a little pullback to another swing point C, and then the price needs to start rising. At this point, you want to start looking for the D. So you measure the distance from A to B. Let's say in this case, for example, 30 pips, right? So from A to B, 30 pips. Then there is the C, and from C, you measure those 30 pips and that's how you find the D. And the D is the place where you go short from, right? You go short from there. This is why the setup is called AB equals CD, because the distance from AB needs to equal the distance from C to D. All right. Now let me show you this on the chart. It'll be a bit clearer, I think. So those two pictures are the same, by the way. Let's start with this one. There's a swing point A here, and the price starts to rise from there. It hits swing point B, then turns and creates swing point C in here. The price starts to rise, and by this time you should be alert. When you see this, you should start being alert. Now, the point C, there's another rule to trading this. The point C needs to be below 50% of the distance from A to B, right? So that's why my Fibo has that 50% mark in here. So basically the C needs to be somewhere in this area, right? Below that 50% mark. And it can't be below that A, below the swing point A, right? It can't be here, so it needs to be somewhere in here. So that's the C. So what you do is you measure the distance from A to B. Let's say in this case, for example, 60 pips. What you do next, from point C, you measure those 60 pips, and this is your resistance. This is the D, right? So you go short from there. Now the right picture only shows how I moved the Fibo tool. As you can see on the first picture, I measured distance from here to here. This is how I used the Fibo. On the second picture, I took the Fibo and moved it so it begins in point C and points to the point D, right? It's the same distance, so you just take the Fibo and move it so it starts at the C. That's what the second picture is supposed to demonstrate. All right, this is a long trade scenario of this. So again, swing point A, price goes downwards. Then swing point B, price turns, a little pullback to the swing point C, and the price starts moving downwards. At this point, you want to measure the distance from A to B. Let's say that it's 70 pips in here, and the same 70 pips, you measure it with Fibo, and this is the D, right? This is it, and you go long from there. I was trading this one on 30-minute charts, hourly charts, and also on a daily chart. I was trading that just as a standalone setup in the past, but what I prefer now is to combine it with volume profile setups. I prefer combinations, as I said before, right? So, but you can still trade this blindly, like just a one setup, but it won't have such a win rate as if you use it with other setup, like a combo of setups, for example, with volume profile. All right, last example of this ABCD setup. This is a short trade scenario. Again, there is the wave-like movement from A to B, then a pullback to the C. You identify the D using Fibo, or however you want to measure the distance. Fibo is the quickest, and short from there. Now, it will take you some time for you to start seeing these patterns. At first, you know, it will be a bit clumsy, maybe you will miss a couple of those, but you'll start seeing these, especially if you do a proper backtest. Then you won't even need a Fibo to see these patterns. All right, so at first it may be difficult to see that pattern in the chart, just like this, but after some time it will become easier and easier. Now, let me talk a bit about stop loss placement. There are basically two rules to follow. You place your stop loss at a swing point and behind a rotation area. Now let me demonstrate this. What you're looking at, that's the euro dollar 30-minute chart, and I took this picture previous week. This was a prediction from my members area where I predicted those two short levels. Let me first talk about this one. So there was a short level, and it was based on this little rotation in which heavy volumes were accumulated. So the idea behind this was go short from here. Now, talking about stop loss placement here, let's follow these two rules, all right? So a rotation area, the stop loss needs to be behind a rotation area. This is the rotation area. And at a swing point. Now, by swing point, I mean the high of that rotation area, which would be this place, right? This is the swing point of that area the trade was based on. So this would be the stop loss. Now, the reasoning behind this is that, as I was saying, in rotation areas, heavy volumes are often traded. And if the price went past this rotation area, it would mean it went through the resistance. It would mean it would go through that heavy volume area. And when it went through the heavy volume area, then it would mean that the resistance basically failed. That sellers from this place just weren't strong enough to defend this place, and that the buyers just pushed through. And there's no point holding that position any longer, because a resistance, which was marked by this rotation area here, clearly failed. So no point in trading that trade anymore. So quit it in here. All right. Now, if you look at that second short that I predicted, by the way, this one hasn't been tested yet. This level is still active. The euro currently is way below this. But anyways, this is the level. This one was based on another volume profile setup. I won't be talking about this here, but there was a little rotation in here. And this was the swing high of that rotation, the swing point being in here. And this would be the stop loss, right? So it is behind rotation area. Even though this is just a little rotation area, it is behind a rotation area, and it is at the swing point, right? Now, what you can also do is you can use simple like fixed stop loss or fixed take profit, which would mean, for example, if you are day trading euro dollar on a 30-minute chart, then it could be, for example, 10 or 15 pips. And that's quite okay. But I slightly prefer this method, which I showed you here, because this method nicely adjusts to changing volatility of the trading instruments you are trading, right? It adjusts to the volatility. If you use fixed take profit and a fixed stop loss, then it doesn't really adjust to anything, right? That's why I prefer this one. There's actually another method, and it sort of aligns with what I'm showing you here. It's called volume-based take profit and stop loss, and you can learn about that in the book, which I'm going to give you at the end of the webinar. That's my preferred method. So yeah, that was the stop loss placement. Let's now talk about take profit placement. Where you want to place your take profit is a bit before rotation area. Now, what you see before you, that's the same picture as before. Only in this case, I took the picture a couple of hours before that, before the first picture which I showed you. This is a picture from a video I made in my members area, making that prediction, right? Making that prediction of going short from there, going short from that rotation with those volumes being accumulated here. So based on this, based on what you see here, there was a little rotation here, and that rotation is a good place for a take profit, right? Take profit from this short. Remember when I was saying that in rotation areas, heavy volumes are traded, right? Now you can see that on the volume profile here. You see how wide it is in here at the place where there was this little rotation, even though this wasn't the biggest rotation ever, but still there was a little rotation and heavy volumes were traded there. So this was a significant zone, because heavy volume zones usually work as a strong support or resistance zone. So this is potential support. But when you go short, you don't really want to trade against supports, right? So the best thing for you to do is just take your profit here before the price reaches this support, before you start risking your position, risking potential reaction to a support, because the support could ruin your open position, right? If the price reacted to that support, well, you can say bye-bye to your profit. So that's why it's better to just quit it before the price reaches potential support, right? So that's the little rotation area in here. Ideally, you quit the trade when it hits, or when it is about to hit the first rotation area in the way. If the first rotation area is too close, then the second one, but ideal scenario is the first one. Now at this place, I'd like to give you some pointers to further education. Again, this is the website which I ran. I'm pretty active at the website. There's plenty of articles, plenty of videos. This is what I do almost each day. It's called Daily Market Analysis, and you can find it in here. When you go to the menu and click this, then you'll go to Market Analysis section, and almost every day I do a new video analysis there, so you can check this one out. And if you really want to improve your trading, and if you want to bring it to another level and learn to trade using volume profile like I do, then what I recommend is checking the trading course and tools, which is in here, the yellow highlighted button. And in here, I recommend checking out the Elite Pack. The Elite Pack is educational and indicator pack that I created for you guys. This is what it consists of. If you give me just a minute or two, I'll just go over it real quick. And I'm going to make you a special offer on the Elite Pack as a special thanks for being here to the end of the webinar. So this is what the Elite Pack is consisting of. It consists of volume profile video course, which is 15-hour-long course on trading with volume profile, price action, and VWAP. Then the next thing which you are going to get is my personal trading levels. Those are intraday levels as well as swing trading levels, and you'll be getting updates on these twice every day. So basically you can trade alongside me every day using my trading levels. Now another thing is volume profile indicator pack. This is my volume profile indicator which I developed for NinjaTrader 8 platform. Recently I had the volume profile recoded from scratch, and currently it is super lightning fast, super precise, and I'm pretty sure there is no better volume profile around over the internet. Maybe I'm wrong, but I'm pretty sure about this one. It's great. The coder who did this did a wonderful job. Anyways, that's the volume profile indicator pack. And what you'll also get is a VWAP indicator. Now, I've already done a NinjaTrader webinar about VWAP. It's on YouTube, you can check it out. And what VWAP is, it is a volume-based indicator, and it very nicely works together with the volume profile. I really like combos of these two, using these two together. My main tool being still the volume profile, but these two complement very nicely each other. Now, at top of all that, what you are going to get is a free tech support. That's this. And what this means is that this nice guy will connect to your computer and he will install NinjaTrader for you. He will install all my indicators. He will connect you to data, and he will load all my workspaces that I use every day in my trading. So he will do all the grunt work for you, so you can focus on learning how to trade and on your own trading rather than, just setting everything up yourself. So that's the special support that we provide to the Elite Pack members. Now, if you guys were to buy all this separately, it would cost $836, but I'm not going to charge you that. Here is a special offer as a special thanks for being here until the end. I'll give you all that, the whole Elite Pack, for $397. If you do the math, then that's 52% off. And if you want it, then just go to my website. There'll be a banner like this, you click it and you'll be able to get the Elite Pack discounted. All right, this is going to be a time limited offer for the next 8 days. All right, so until next Friday, you can get the discounted Elite Pack. Afterwards, the price will rise. All right, so that's about that. That's about the Elite Pack. If you want to read some reviews on it, see what the members have to say, then this is a page. It is an unbiased review page. It's called forexpeacearmy.com. You just go there, search for Trader Dale. My service has a 5-star rating there, so that's the best rating you can get there. Check it out yourself. See what the members have to say. Check it out yourself. All right. We are getting near to the end, guys. I'd like to thank you for attending and give you a couple of things. Here's a #1 gift, and it is my volume profile book. It became #1 best-selling book on Amazon, so people seem to like the book. If you haven't read it yet, go and give it a try. I'm pretty sure that you'll like it. Now, the second thing, that's a new thing. It is a software which I coded, I had it coded, and it is a trade manager software, and I use this one for my everyday trading. And it has so many cool features. You guys will be surprised that it has features which no other trade managing software ever had. You'll be surprised, I can guarantee you that. So check it out, give it a try. I'll give you this for free. It is full unlimited version of the trade manager software. You just download it, use it. Let me know how you like it. All right. Now, you can get both those gifts along with a web page, a special web page, which I put together just for this webinar. On this web page, there are a couple of recordings. There are webinar recordings that I think you may find interesting. Also, a couple of quick guide videos and short tips videos and stuff like that. Simply videos which I think that you could find interesting. So check it out on this page. Just go there and you'll need to enter your email address and we'll send everything for you. So we'll send the book, we'll send the trade manager software, and I'll also send you access to that special webinar page. All right, maybe you want to take a screenshot or something of this link so you don't lose it. I'll try to place it in the chat. Yeah, here it is. Here's the link for you guys. So grab the link and download it. You can spread the trade manager as you want. It's free for you to use. All right. So that's about it. Thanks for joining us today, guys. Thanks for attending. I'm so glad that so many of you showed up today. If you have any questions, this is my email address. So send those questions there and I'll be happy to answer all of them. Also, there is a quick chat on my website, so you may use this one as well. All right, so that's about it. Thanks so much for coming today. Also, thanks so much NinjaTrader guys for having me here again, this time for the 6th time. So thanks again. I'll be looking forward to seeing you next time, maybe in some next webinar or maybe in our members area. So see you, and until then, happy trading.